Before I get into everything that's happened the last couple of weeks with the tax loss harvesting, let's take a step back. Quick summary of my Bitcoin situation over the last 3 or 4 years. Let's go back to late 2017. The price of Bitcoin was soaring. I bought a bunch of Bitcoin. I eventually had about 18 Bitcoins. A lot of it was in altcoins. Then January rolled around. There was a big crash. The market went down. I got kind of crazy and I just sold everything, got out of the market, and I didn't look at Bitcoin for like 3 years. And finally, April this year rolled around and I was like, oh, Bitcoin's way up. I better get back into the market. So that was when I started accumulating Bitcoin once again. Now, I'm not going to say exactly how much Bitcoin I have right now. I'm sure to some of you it would seem like a lot. To some of you it would seem like very little. Let's just say to me it's a fair amount and I'm comfortable with it. So accumulating Bitcoin in April, May of this year, I got to a number that I'm comfortable with, an amount I want to hold for 5 or 10 years, hoping it'll go up to $500,000 or even $1 million a coin. I want to emphasize the long-term holding. The whole plan now is to hold the Bitcoin for the long term, years and years, 3, 5, 10 years, even longer. At which point I might sell some, maybe borrow against it, or just keep holding for even longer. It's important to remember this is a long-term hold because if I'd really stuck to that principle, I never would have even tried the tax loss harvesting. Then in early June, I watched a video by a very, very popular financial YouTuber. I'm sure you've heard of him. I won't mention his name, but his initials are Graham Stephan. The video was about tax loss harvesting, the same exact thing I'm talking to you about right now. As with all of Graham's videos, it was super interesting, super informative, really well researched. It totally got me thinking about tax loss harvesting for my crypto portfolio. And I want to make it very clear, I'm a big fan of Graham Stephan and his videos. I love everything he does. And everything I'm saying today, none of it's a knock at him or any problem with anything that he said. So after watching Graham's video, I went and did my own research. And of course, he's totally right. Crypto tax loss harvesting is totally a thing. In case you're not familiar with it, here's a little summary of how it works. Let's say you bought some crypto up here and then at some point later sold it down here. You're going to lock in that loss. That's a capital loss. It's like capital gains, but it's a loss. And then you can use that loss on your taxes to offset any future capital gains. So here's an example. Let's say you put $10,000 into Bitcoin, and then a few weeks later, your $10,000 investment was only worth $5,000. We all know it was at $62,000 and then it was at $30,000. So it can totally do that. So that's a $5,000 loss. Then you can sell that and use that loss to offset any future gains on things like stocks, bond funds, crypto, real estate, or anything else where you might have a capital gain. So let's say you then had a $5,000 gain that year or the next year because you sold your Tesla stock, your Apple stock, or whatever. Instead of paying 15 or 20% capital gains tax on the $5,000 gain, the entire gain itself is wiped out by the $5,000 crypto loss. So you've got the gain, you've got the loss, they wipe each other out to zero. So your savings is the 15 or 20% capital gains tax you're now not paying, which in my case is increased by a bunch of state tax, the net investment income tax of 3.8%. It all adds up to a fair amount of taxes. So let's get back to that transaction we were talking about. You sell your Bitcoin, you've locked in that loss. You want to buy it back as soon as you can at a price that's the same as what you sold it for, or ideally a little bit lower. You got to wait a little bit of time before you do that buyback. It's that little bit of time between when you sold it and when you buy it back that things get tricky with the IRS. With stocks, you have to wait a full 30 days before buying the same stock back again. Otherwise, if your Apple went down or your Tesla went down, you could just sell it, take that loss, which is a great tax benefit, and then immediately buy it back at basically the same price. The IRS doesn't like that. With crypto, we get around this because cryptocurrency is not a security for tax purposes. The IRS has specifically announced that it is to be treated as property, just like real estate. So we don't need to wait 30 days to buy it back. But how long do we have to wait? The IRS wants these crypto sales to have economic substance, which basically means you aren't just doing it as a tax dodge. You have to bear some market risk. In my case, I could get market risk either by not buying the Bitcoin back immediately, waiting a few days or a week, which in the volatile world of crypto is definitely a long time and it's very risky, or by buying something else with the money. In my case, I bought Ethereum. I knew we were going to have some substantial capital gains in the next couple of years from some private company stock that's going to sell and some real estate we might sell also. So I knew we could use the Bitcoin losses to cancel out some of those future capital gains, dollar for dollar. As you probably know, saving taxes is exactly equivalent to making more money. If you can save $5,000 in taxes, it's just like someone handed you $5,000. Looking at my Bitcoin, I could tell I had enough that trying this strategy was definitely intriguing and could pay off big time and save taxes. And based on the price we'd bought Bitcoin for in April and where the price was now, which was a lot lower, we had a pretty large loss on our hands, and the potential tax savings by capturing that capital loss was more than I could pass up. So I went and did even more research, and I found out a couple things. Nobody knows how long the IRS will approve of buying back the Bitcoin after selling it. 5 minutes, 5 hours, a day, 2 days, a week, 30 days, nobody knows. For stocks, it's definitely 30 days, but there's no such rule in crypto. Basically, my research showed the IRS might disallow it if you bought it back super quickly, like within 5 minutes or 5 hours or the same day. And there are penalties for underpayment of tax. So if you were underpaying your taxes because you were taking this capital loss write-off sort of thing, I just didn't want to risk it. You have to have your money at risk. In my case, not being in the market in crypto was definitely a risk. The price could have skyrocketed right after I sold it. Ultimately, my research showed that 7 days was enough, 3 might be fine. Somewhere in that range was kind of what I was shooting for. Another thing here is you have to keep track of the exact batches that you bought and the ones that you sold and kind of match them up because the IRS needs all those details. So this is what I did. I made a spreadsheet of all the batches I bought at Gemini. Yes, I use Gemini. I hate Coinbase. That's a topic for another video. So let's take a look at my spreadsheet. I'll just grab my handy dandy computer here. So as you can see, I blanked out all the amounts of Bitcoin that I bought, and I'm just showing the prices of the Bitcoin. So you can see I bought a bunch at 57,000, 58,000, 58, 58, 63,000, 52, 52, 51, about 51, and 48. Now I did buy some for less than 48,000. I bought some at like 44, 43, 40, 35. But it wouldn't have made any sense to sell those to try to get a loss because it just wouldn't have been very much money, and the prices were very similar. As you can see, I sold all the batches at around 38,500. There were 10 batches. I just sold them one after the other, bang, 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 and that's why the prices were very similar when I sold. All right, enough of that computer. So all told, I sold about 75% of my Bitcoin portfolio in those 10 batches. There was another 25% of my Bitcoin that I didn't sell because they were purchased anywhere between 35,000 and 44,000, and that was just too close to the selling price that day. And here's where things get kind of messed up. I was originally going to keep all the proceeds of the sales in US dollars.
And I very much wish I had.
But at the time, for various reasons, it seemed wiser to use it all to immediately buy Ethereum. My thought process on buying Ethereum was that Bitcoin and Ethereum generally move together. Bitcoin goes up, Ethereum goes up, they go up and down together, and this would give me a hedge in case the market moved up. Remember, I wanted to buy the Bitcoin back at more or less the same price I sold it for, or maybe a lower price. I didn't want it to go up and have my dollars down here and have the Bitcoin sort of running away from me and then have to buy it back at a higher price with dollars. I thought if I had Ethereum and Bitcoin went up, the Ethereum would just go up as well. And at some point in a few days or week, I could just sell the Ethereum and buy the Bitcoin and it would all just be a wash.
Well, it didn't work out that way.
So I sold all the Bitcoin and then I had the dollars and I immediately turned around and bought Ethereum with all of that money at the current price of Ethereum that day, which happened to be $2,800 per coin. And that's when things started going sideways. Bitcoin, which had been trending downward kind of like this, continued to do that, and it reached a low down into the low 30s, like $32,000, $33,000, $35,000. If I'd had US dollars at this point, I could have bought the Bitcoin back at a lower price. I would have had more Bitcoin actually than when I sold, plus the nice capital loss to offset future taxes. It would have been awesome. Instead, I had Ethereum and it trended down even more than Bitcoin. They were kind of going like this. Bitcoin's going down, Ethereum is going down even faster. What I didn't realize when I sold Bitcoin and bought Ethereum was that Ethereum was very high on that day relative to Bitcoin. I should have done it a few days later. So I didn't want to sell the Ethereum and buy Bitcoin because I would have had less Bitcoin than when I started. So I just did nothing and I waited. What do you guys think I should have done? I'd love to hear your thoughts in the comments. And then Elon tweeted about Bitcoin, positive news. The price started spiking and it started going like this, and Ethereum wasn't going up very much. And so Bitcoin went up and Ethereum has remained relatively low relative to the Bitcoin. And as the two diverge, I'm in a worse and worse position as far as selling my Ethereum and getting back my original stake of Bitcoin. So as of today, which is June 16th, I still have all the Ethereum I bought a couple weeks ago, and I'm waiting for a day when Bitcoin has come down and Ethereum hasn't, so I can switch back to Bitcoin. I've also bought a bit more Bitcoin in the meantime, amounting to about 7% of the total Bitcoin I owned before this whole thing started. And I'm planning to add more Bitcoin in the coming weeks, assuming it doesn't skyrocket in price, and keep an eye on the Ethereum that I have and hope to sell some when it gets to 2,800 again, which I'm confident it will do at some point. All right, guys, so what have I learned from this that I can share with you and hopefully you can use in your own crypto investing? First, keep a long-term perspective. Everything I did on the tax loss harvesting was to grab some short-term gains, and that put me at risk. Second, don't take actions with big chunks of your crypto all at once. There was no reason for me to sell 75% of my Bitcoin in the space of 10 minutes. If I had spread that out over a few days, I could have sold even cheaper. Or I could have just done this with only, say, a third of my Bitcoin instead of 3/4. Third, you got to think about what would happen and what you would do if things don't move in your favor. I was so focused on Bitcoin and Ethereum correlating that I wasn't prepared for them to move in opposite directions, which totally screwed me over. Fourth, if you do try crypto tax loss harvesting, definitely just keep your money in US dollars or a stable coin like Tether or Gemini dollars. Buy back your position as soon as you're comfortable. Involving another coin in this trade just made things way too complicated. It meant that too many different things could happen and things could go sideways very quickly. Fifth, I'm now trying to think of my positions separately rather than together. I hold a bunch of Ethereum, I hold a bunch of Bitcoin. That's okay, that's the reality. And if and when Ethereum goes up, maybe I'll sell it, but I don't have to think of these things as intertwined just because they resulted from the same tax loss harvesting transaction. Also, you get up to $250 in free crypto when you sign up for BlockFi using the link below in the description. If this video has been interesting or helpful in any way, please gently tickle the like button. Don't explode it, don't smash it, don't crush it or destroy it or anything like that. Just gently tickle it. I appreciate it. Also, if you want to subscribe, go ahead. It lets me know you're interested in more videos. Also, I really want to hear some comments from you guys. Let me know what you're thinking on crypto tax loss harvesting. Are you going to do it? Are you going to hold your Bitcoin forever? Let me know in the comments. Thanks again for watching. I totally appreciate it, and I'll see you in the next video.